Hi, David Bassanese here, Chief Economist at Beta Shares. And this is a snapshot of my market trends report for the month of June. And reviewing the past month in May, it was another risk-on period. Global equities did eke out another positive gain. The MSCI All Country World Index returning 1.1%. The Australian market did a little bit better in the month. It was up 2.3%, and the US market, by contrast, a little bit, not as well as global markets, only up 0.5%. And really the theme was that the fears of inflation and bond yields rising that have been dominating markets in recent months did ease back somewhat in the month. So US 10-year government bond yields, for example, actually eased about 3 basis points to 1.6%. The US dollar also eased somewhat in the month, even though we did get some US inflation numbers, consumer price inflation numbers, which were at the top end of expectations. But I guess the market is coming to the view that, maybe this is the worst of the inflation readings we're going to see, and maybe things will start to, maybe this is just temporary, and inflation will start to ease back down again in the second half of the year. That's certainly my view, and I think the markets are still, trading on that view at the moment, as evident from bond yields remaining fairly well contained. In terms of major themes at the moment, the battle between growth and value stocks continued. And again, funnily enough, even though bond yields were contained in interest rate fears eased somewhat in the month, value stocks, things like energy and financials, doing better than technology. Really what's dominating here is just the reopening trade, things that were particularly hard hit during COVID, continuing to outperform. And so we saw value again outperform, even though bond yields were contained in the month. And I think that's going to be an ongoing theme, at least for the next few months toward later this year, the value parts of the market outperforming the growth parts of the market, such as technology. In terms of the outlook, we're really, crucially dependent on this idea that inflation uptick that we are seeing as part of the reopening of the global economy and the supply chain bottlenecks that are causing some pricing pressures will be relatively short-lived, and as a result, the bond yields and inflation won't get out of hand in the second half of the year. And provided that does remain the case, and again, that is my base case, I think the outlook for equity markets does remain pretty encouraging. So that's pretty much it for the month. If you'd like to see full details of my market trends report, please visit the insights section of our website. Thanks for listening, and I'll see you again next month.